with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, China's economic performance remains stable in May, and we will also take a look at how the country is making efforts to boost innovation. And now let's begin with our top story. The National Bureau of Statistics says China's economic performance remains stable in May, with improvements in major indicators, especially in the high-tech manufacturing. However, the Bureau also says challenges still remain both at home and abroad. CGTN's Sun Tianyuan reports.
Official data shows China's industrial production maintained a robust growth in May. The country's industrial output rose by 5.6% year-on-year last month. That's up 0.3% from April. Investment in high-tech manufacturing also grew quickly in May. For instance, investment in manufacturing of aerospace vehicles jumped by 53%.
90% of regions, 80% of industries, and nearly 60% of products achieved year-on-year growth. Among them, the equipment manufacturing industry grew by 7.5%.
Meanwhile, China's service sector continued to recover, with fast growth in information transmission and software. Imports and exports of goods also grew in May, recording an 8.6% increase at over 3,700 billion yuan, or about $500 billion. The Stats Bureau says China's overall economic performance in May was generally stable.
However, we should be aware that the external environment is complex and severe. Effective demand remains insufficient at home, and sustained economic recovery is still confronted with multiple difficulties and challenges.
While many international organizations have raised their forecasts for the Chinese economy in 2025, Beijing says it will maintain a long-term stable growth and continue to pursue high-quality development. Sun Tianyuan, CGTN. Beijing.
So what's the current state of China's economy? What are the signals behind these indicators? And what has China done to cope with its current challenges? For more on this, joined us on the line now are Andy Mark, Senior Research Fellow at the Center for China and Globalization, and also Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China. So, Professor Qu, I will start with you. I want to begin with the supply side of the China's economy, as we see industrial output in the first 5 months of this year grew at a 6.2% annual pace. So that's faster than the Q1 GDP growth. So what do you think about the health of China's industrial sector so far this year?
Well, I think Chinese economy is basically beyond lots of observers' expectation, and I believe professional institutes like IMF and also JP Morgan has already revised up their predictions for Chinese economy and performance of the year based on their observation of the first half of China's economic performances. And I think the reason for that is, number one, I think China actually has been shifting gears into another level of the manufacturing, which we all understand is the high-tech or tech-savvy manufacturing. For example, like the EV, also like the lithium battery industry, as well as the digitalization equipment for the internet, and also for the green campaign devices, for example, like the carbon reduction machines and etc. So what we call this are the new quality productive forces that actually are taking the major role in Chinese economic performances, because they are high added value and they have a huge gap in the demand in the whole world, because every country wants to go green, every country wants to have high level of digitalization, and this has become a very important demand of the export. And I think the second part of the Chinese economy growth comes from the service sector. As we all discussed before, Chinese economy is about to cross beyond the middle income level and going to the high income level. And every time when the economy reaches that threshold, their economic structure will always shift. Basically, it's must shift, with the service sector or consumption sector as the major part of their GDP. China recently showed a very strong sign of that. For example, you see the hospitality industry, tourism industry, catering industry are actually overheating everywhere. You see people, mountain people sea, and you see people are just traveling around, spending their times and their money, to give themselves a treat, to relax and enjoy their life. So this become a trend, not only for now, but also it's going to be in the future. So I think this two plus together has formed a strong momentum in the recovery of Chinese economy. But also we're going to see export will still be, disrupted by the geopolitical conflicts as well as the slow recovery of the real estate market. So these are all the potential risks we're going to look into.
And Andy, so we found that the numbers for the high-end manufacturing sector were quite strong. So what does this say about China's economy?
Well, I think, again, I would echo what we just heard, that one, of course, this shows the underlying resilience of China's economy. But I think it also shows this transition, or what we're witnessing is the early stages of the unleashing of new productive forces, where we're seeing advanced manufacturing, eco-friendly industries, or I guess new ways of manufacturing, as well as new sectors in electric vehicles, solar panels, wind turbines, et cetera, these so-called industries of the future. And I think perhaps a little bit more fundamentally, I think, again, what this demonstrates is China's unique capabilities among the major nations to formulate and implement long-term strategic goals, sometimes spanning even decades. And I think I would put the dual circulation strategy, which we're also seeing strengthen domestic consumption as well, not just industrial production, and some of the more global initiatives as well. So the Regional Comprehensive Economic Partnership, Belt and Road Initiative, SCO, Shanghai Cooperation Organization, which of course has an economic component as well. So I think all of these, again, are highly positive. It's impossible to not look at short-term numbers, but I think we shouldn't lose sight of structurally what is going on. And I think what we're witnessing is a very important long-term positive growth trend in the Chinese economy, not just from a quantitative perspective, but in the mix of what is produced and how it is produced as well.
And so, Professor Chu, you just now mentioned industrial sector, the services sector, but for foreign trade in May, we've seen that the imports and exports combined for an 8.6% growth rate, and the exports alone surged by over 11%. But the European Commission recently actually announced that it would impose additional tariffs of up to 38.1% on Chinese EVs starting in July. So how are China and European car makers reacting to this decision?
So I think this is basically very bad news, but I think Chinese government and Chinese car makers are going to react, in a very reasonable way towards this kind of a decision. And I do believe this is not a final call, and in the future there probably going to be some further, space for discussion. The reason why is that number one, yes, I think this tariff is ridiculous and it's very, very high. It's averagely towards different Chinese car makers. Averagely, the tariff augment is about 25%. But basically, these car makers are not the top sellers in the European market, because recently in the European Union, the top EV sellers are still local brand or the local joint stock brand. So I think the Chinese car makers and the impact they're going to receive are mostly is coming in the future, not currently. Also, I don't think this is a good decision, is because even though the top sellers in the European Union for the EV are local brand, for example, like the Stellantis, or for example, like the French car makers, but they have huge stake in China as well, because they also purchase the Chinese car makers, by purchasing their stocks or investing their technologies. So basically, you have to understand EV industry is not like, previously the Japanese car tried to conquer European Union, or European cars is going to, conquer American market. It's not like that, because everybody have the stock or share of each other, or they own technology with each other. So when you crack down the car makers from China are basically squeezing out the benefit of your own car makers as well. And also you're impeding your own car makers exporting your car to China because their costs are going up at the same time together. So it's going to be a very stupid decision made by only purely politicians. And we have seen that car makers, very large European champions like Mercedes, like BMW, they've been unanimously stand together to reject this decision. So we're going to see maybe after this geopolitical conflicts has been eased for a while, and I think this political based tariff decision probably we're going to be removed.
So, Andy, so what do you think about it?
I do agree that this is almost entirely a political decision in that the EU is trying to thread the needle geopolitically, because on the one hand, if you look at the US, which imposed a 100% tariff on Chinese EVs, that the EU is looking to placate the United States, which of course is exerting tremendous pressure and arm twisting on countries around the world, especially the EU, to follow along on the US's quixotic and doomed quest to contain and suppress China's growth. So the EU is getting tremendous pressure from the US to implement very punitive tariffs. But at the same time, the EU also recognizes the value of its relationship with China and wants to antagonize China as little as possible. So I think that this tariff percentage was meant to do that. We also have to recognize that this is provisional. So although the tariffs will come into effect in July, there's still the possibility that they could be amended or perhaps even eliminated. And I think the EU logic here is that by choosing, a number up to, I think it is at the maximum is 38%, that this will hurt the profitability of Chinese EV makers, but not enough to make them entirely uncompetitive. Now, of course, the Chinese Ministry of Commerce has taken a very strong line and has initiated some measures to demonstrate its unhappiness. So I think we have to see how this plays out. But I think also it's worth pointing out here that there is a certain degree of hypocrisy and double standards here, because the EU as well as the US is saying that this is an overcapacity, a quote-unquote overcapacity problem that China has created. But when we look at Germany, which also has a globally competitive automotive industry, they export something like 70% of their domestic automobile manufacturing capacity outside of Germany. The comparable statistic for China is 20%. So I think it is very political. The other political aspect to this is domestic EU politics, where France is very much in favor of these tariffs because it believes that it can perhaps catch up, gain competitive advantage against Germany. Whereas the Germans, of course, are very much against this because they are most exposed in the China market, especially the automotive companies, Audi, Benz, etc., which has an enormous stake in the Chinese market. So again, I would agree that this is almost entirely political. The EU is trying to maybe have it both ways. They want to please the US. They don't want to antagonize China too much. And we have to see whether they, in fact, will be able to thread this needle.
And that was the EV industry. So, Professor Chu, I also want to get your take on the real estate sector in China, because the home prices in 70 major cities in China declined once again in May. And we know that China has implemented policies to support the real estate market. But of course, there will be a lag between the implementation and the intended effects. So what is your take on where we stand now in China's real estate market?
Well, I think China right now has been in the phase one of the slowing down of the property market. According to our observation towards other markets like Japan, South Korea, America, in the European Union. We've been seeing that all of this market have like three phases of the development. In phase one, I think people are pessimistic, and people's expectation for the future is house prices is gonna drop, and until it finally stabilized. And second phase is that the whole market stay at the low point, and people are not looking into this market. And then in phase three, it slowly goes up, and goes higher than before. And I think in those developed market I just mentioned, they all seen certain pattern like that. In China, I think it right now is at the end of the phase one. I think the market has been stabilizing, even though the government has been provided lots of very powerful policies towards this market. I think in the third and fourth tier city, it's still going down, but I think the acceleration has been slowing down, which means it's been stabilizing. And people are okay. They're seeing it's probably the lowest point in those small cities. In the bigger cities like Beijing, Shanghai, and Nanjing, Shenzhen, Guangzhou, and I think the expectation has already been stabilized. Beijing and Shanghai, and we've been seeing the inventory of listed houses, second-hand houses, has already been, going in and going out in a very equal rate. It's not increasing, and house prices has been fluctuating around like 0.1% ups and downs. And I think this market expectation has already been here. And in some other cities like Nanjing, and we'll be seeing even the turnovers for the purchase of the houses has already been going up in the past 2 weeks, and house prices also goes up like 0.5%. So I think this is the end of the first phase in the big cities, and close to the end of the first phase in the smaller cities. And meanwhile, I think in the future, after 1 or 2 years hanging around in the low point, the house market will eventually goes up. For example, in Japan, the current house prices in Tokyo and Osaka and in Nagoya has already been higher, much, much higher than in early 2000s. And in the USA, the house prices generally are much more higher than the price in 2008. A similar pattern happened in London, in Frankfurt, and in Paris as well. So I think in the future, real estate market is still going to be very important for Chinese economy, not only China, for many other matured economy, even though it's very powerful stock market. Real estate market are still very important pillar of the national economy. And in the future, the concentration will be in the big cities or advanced smaller cities like Beijing, Shanghai, Shenzhen, Nanjing, and Suzhou, and Guangzhou, and etc. So this is going to be the future for our Chinese, trends in the home market in the future.
And so, Andy, so many international organizations have raised the forecast for Chinese economy this year. So what do you think of it? And why are they more optimistic about China's economy?
Well, I think that, of course, the main reason is they are following the data. And again, I just want to emphasize that I think this really is just a demonstration of the importance of looking at the bigger picture and not getting overly fixated on monthly or quarterly figures. And we look at these longer term initiatives, common prosperity, the dual circulation strategy, other of these more global initiatives, the Belt and Road, of course, that we see that China is succeeding in achieving its longer term goals. And of course, the economic reform, the new productive forces are a very, very crucial part of this. So I think, again, the outlook ought to be very positive.
Well, we're speaking with Andy Mark, Senior Research Fellow at the Center for China and Globalization, and also Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China. After a short break, we'll take a look at China's innovation capability. Stay with us.
Welcome. I'm Elaf Ellard, economics professor and member of the Data Science and AI Center at New York University, Shanghai. On the World Today program, you can find in-depth and impartial insight, as well as critical commentary on key trends in the Chinese economy, financial technology, business, and blockchain. To prepare for the world tomorrow, join me on World Today.
You're listening to Biz Today. I'm Zhao Yang in Beijing. China's central bank has selected nearly 7,000 tech companies for its newly established tech-free lending program. This is one of the steps to boost the science and tech innovation among rising global competition and foreign crackdowns. As part of China's intensifying push for science and tech self-reliance, the People's Bank of China and other government departments set up a tech-free lending program to offer qualified tech companies 500 billion yuan or 70 billion US dollars in loans for innovation. The program offers loans to small and medium-sized technology companies with an interest rate of 1.75%. So, Andy, as global competition in the science and tech field intensifies and the U.S. and some other Western allies crack down on China's tech sector, how could this relending program help the small and medium-sized technology companies and help bolster China's science and tech innovation?
Well, China recognizes, of course, the importance that science and technology innovation plays in economic development, as well as national security. So I think that this is no surprise that it is taking new and innovative measures like this. And I think we should also point out that, this is also a very key part of this new productive forces initiative as well. And I think it complements very well China's human capital capabilities. So in terms of STEM graduates, science and technology, engineering, and math graduates, China graduates about 3.6 million a year. And this is more than 4 times that of the United States. And if we look at PhDs, it's almost 80,000 a year, which is about double the US's of 40. So while the gap in PhDs is not quite as wide, it's still quite sizable at double. So we look at this, what is the missing piece then? It's money and markets. So we see then the Chinese government now with this initiative to provide money. And of course, the market, at least the latent market, is there. And I think with these 3 pieces in place, people, money, and markets, it's very likely we will see then the emergence of a new batch of unicorns, especially in these areas of hard tech or deep tech.
And Professor Chu, so how do you view China's innovation and IPR protection efforts in the past few years?
Well, I think this is going to be, this kind of effort will just be more and more. Chinese government has listed the new development plan for the high-tech development. For example, we actually has been adding up more of this support financially towards those little giants for the local champions and also for the tech startups, not only from the banking sector support, but also from the local government, from the central government, and also from all kinds of, what we call the public and private, joint movement. It's like the government funding from the FOF, the fund of the fund, and also try to attract more of the private PE, private angel to come into this area. And this kind of the co-campaign or co-movement has right now been focusing on a lot of the, star enterprises. For example, what we know is that in China, there are many AI startups that are mushrooming, as well as the aviation and also aerospace's, private, skyrocket. Companies are also been in the scope or radar of this kind of the financial support, as well as the robo companies for the robot and and some consumption areas companies have also been paid attention to. So I think in the future, right now I think really we're in the bottom of the kind of getting listed or getting funded, like compared to 2010 and 2015. But I think in another 5 years, I think we're going to welcome another new climax in this area.
So, Andy, when we discuss the science and technology innovation, there are different players, the university, the research institute, the enterprises. So what do you think is the role of enterprises?
Well, that's a good question, Zhao Yang. I mean, I think every stakeholder has an important role to play, and often they can play more than one. So research institutes, of course, primarily engage in research and development, but they can also commercialize products as well, and often scientists leave these institutes to set up companies. From an enterprise perspective, I think, of course, the profit motive is important. It's not everything, but it's important. And enterprises, of course, are very good at bridging the gap between what individuals and businesses and governments are willing to pay for and the inputs of technology, product, people, etc. So I think companies or enterprises have a very central role to play. And we're seeing, especially in China, that it's not just the private enterprises, but often the SOEs as well are making important contributions when we look at the entire spectrum of technology. So a lot of attention, especially in AI, has been paid to consumer-facing technology. But we should also recognize new materials in space, in a lot of these other more narrow, perhaps less sexy areas. Enterprises of all kinds of ownership structures, I think, have an important role to play.
Well, we're speaking with Andy Mark, Senior Research Fellow at the Center for China and Globalization, and also Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.